Welcome to Bears in Exile. Today is May 22nd, and this is a continuation of the weekend market overview. We'll be looking at UUP, FXE, GLD, AGQ, and SLV. And we're going to start off with the currencies, and here we have UUP. We had talked about this one pretty often, and we were saying that if it's able to hang out in the bar, it's going to do damage to the bar. Well, we are finally seeing that the bar is taking moderate damage. If it hangs out here much longer, it will take severe damage. We had a green candle on Friday. Looks pretty strong. We almost have an uptick on the MACD, but not quite. Certainly not decreasing the way it should if it was going to roll over and die right now. The secondaries are all very high. MACD's high, stochastic high, RSI high, and we had said that this was looking pretty bubbly. We did get a downtick. Unfortunately, it has already met its price target, meaning that all of this is fixed. So, can it keep going? Well, certainly it can. The bar is weakening, and of course it can also be rejected and thrown out of the bar. But for the moment, it is looking bullish, and if it is able to pop outside of the bar and hang above it, this is going to flip over, and that's going to turn quite a few heads because who would expect the dollar to be strong? And if we look at the 60-minute time period also, you can see that we have lots of room on the secondaries. The secondaries are all ticking up. We already have a crossover of the long-term moving averages, and they already have pretty good expansion. There was some damage done to it, and it has popped back out of it, and the short-term moving averages are pointed up. This would be considered a guppy entry, which should always be taken with a stop, but that looks very, very bullish. And the counterpoint, FXE, the euro, we can see that just like the dollar, the MACD is slowing down. We don't have an uptick again, but it certainly is a very, very mild downtick, suggesting that it could reverse itself. Everything is pointed down. Some people would say that this is, it's oversold on the daily. We are outside of the bar. The bar has taken significant damage. We did say that this was bubbly, and we weren't very comfortable with the angle of this uptick. But regardless of what we think, it was hit. So, this is fixed. It can continue going lower, and with a solid red bar like this, there is a very good chance that it will. Certainly, the news in Europe has not been good, and doesn't appear to be letting up anytime soon. For the last year, all of the downtrends have been sparked by news in Europe for the most part, except for natural disasters. But and if we look on the 60-minute, just like the dollar, we already have in this case, a bearish long-term moving average, and it did come up to test it. And it popped right back out of it and is pointed down. Everything is pointed down. Secondaries all have room to move. Certainly the euro can fall some more, and if it does, I will be watching intensely, because the markets will take a hit with that. Precious metals. We're going to look at GLD. We have not looked at this one before. Really interesting because, we got smacked around with the precious metals last couple weeks, especially in silver. And, we have the long-term moving averages have not taken any damage, and they're still pointed up. We did have a flat line on top of it, and we have a big green bar. It is not a hammer, and the secondaries, you can see, are still low from the sell-off. So they have all kinds of room to move up. And if the overall market takes a hit, what's that going to do to gold? Well, I think fear has a good chance of gold going up. So if the markets go down and gold goes up, that would make sense to me. And if the markets go up, then the dollar will go down and the price of gold will increase. So it seems to me that gold is in a really good position here. We are almost at the point of expansion on the short-term moving averages, which would be a guppy entry. And we can see here on the 60-minute that we have had all kinds of chop on gold. The long-term moving averages flipping back and forth, and right now the long-term moving average is in a flat line, giving us an indication that if it were to reverse hard, there's not going to be anything really to catch it right here, and we do possibly have some excessive separation, but we do not have a downtick yet, signaling that it needs to go down to correct. So very, very bullish looking gold. SLV. A lot of people are saying that silver is done. Silver is worthless. It's finished. I don't think that that's the case personally. Certainly, it has all kinds of headrooms because of headwinds, because of the news, and this drop just totally. All these people were just, oh, buy silver, and then, well, we do have excessive separation in the short-term moving average. We also have the long-term moving average going in for a flat line or crossover, which looks terrible. So, however, we do have a modest uptick here, giving us a price target of $36. We did have one back here too, and the momentum was just so devastating that it there was no chance for it to go back up, which would have been a price target of $40. So now that momentum has abated, it actually does have a chance of going back and trying for this price target of 36. The secondaries, the MACD is ticking up. If it can get through the zero line and continue on its way, there could be a significant move in silver to the upside. Most of the short-term moving averages are pointed down. The fastest one is not, and the other secondaries are also, very low. They can stay there for a really long time. So I mean, there's no guarantee that silver is just going to jump back up. But like gold, if there's fear and everything, gold goes up. My thoughts are that if gold goes up, significantly, a lot of people don't have enough money to buy gold. In which case, you want a precious metal, you can't afford gold, what do you buy? You buy silver. And on the 60-minute, we have essentially almost a perfect double flat line. There is a little more compression that needs to happen in the long-term moving averages, but once we do have a double flat line, which if it continues sideways will happen over the next couple of days, you have a very volatile situation where it can rapidly go up or rapidly break down. So it is a risky bet, silver, right now. But I tend to think that it will go up. AGQ, silver's big brother, or SLV's big brother, I should say, exactly the same spot. And we do have a modest uptick, which would indicate we need a price right about $207. And that will fix all of this. Everything is pointed down except for the fastest short-term moving average, which is moving sideways. And all of the secondaries have room to move up. They are at their bottoms, although they can stay at the bottom. So no guarantees, and just like SLV, almost a double flat line. What am I missing? We looked at gold. Oh, that's it for currency and metals. And we'll be going over several equities tonight. As always, all investing decisions are your own. And this chart and video are for entertainment, educational, and consumption of time purposes only.